Hello everyone, this is Juan Sarmiento and today is Thursday, February the 25th. Today the markets dropped rather dramatically and the volatility spiked. We can look at that by looking at the VIX. Okay, so with the Gini trade, it's a good idea to follow the VIX. And when you have spikes like that, they usually turn into good profits for us. Obviously, if you have a big spike like that, then the profits will be quite significant. This got to almost 80. And here today we went up to 28. A VIX that is normal is around 20 or below. So 28 is pretty good, but guess what? I think we're going higher. It also depends on the S&P 500. So if the volatility is increasing, usually means that the stock market is declining. And so we'll see what happens, but this sometimes means good profits for us. So let's take a look at the monitor tab here, and you see that today I made $1,000 made in paper profits, so it's not real, but up to date this year we have $2,852 in profits. Okay, and let me just show you the account specifically. And you would see that we are at 96. We started this account a year and a half ago, or 2 years, if I remember correctly, and back then it was $50,000. So we've been doing very well. Okay. All right. What I want to do today is go through our positions, and rather than do too many trades, I don't want to enter any new trades because we have a volatility spike. We want to enter our trades when the volatility is low, right after earnings when the volatility declines. So we will be looking for those possible trades. But right now, it's better to sit back, relax, and let the market go where it's going to go. And we take our profits when we can. So I'm going to go through my positions here and see which exactly what is it that I have by looking at all the trades that I have done on each one of those positions and adjustments and so on. So let's start with DHR. And you see here, I go back 130 days. You can select here on the account statement, select the number of days you want to see back. And obviously, we had a position early on that we entered back in October, and we got out of that position by early January. And then I reopened a new one here in February, and our expirations here are June for the longs and March for the shorts. So this is the active position. Everything else is closed, and we can account for that if we wanted to, but I want to focus on what we have active. And so in order to see this properly, you can say right click and say analyze trade, and it just so happens that it coincides with what we have here. Okay, so if you say hide simulations, this is what I show. It coincides very well with what I have because it's the only position and the only trade that I have made is this one here. Okay, there's no adjustments, nothing. So far I have a loss of $669.38. So if I say show positions or high simulations, shows position, and it's exactly the same thing. Okay, we have a loss of $669. Am I concerned? No, there is a lot to go before the expiration on March 19th, and that's when we are going to decide what to do. Besides, a little spike in volatility here, let's say an increasing volatility of only 5% or so, might be enough to make this trade profitable. If it is something like 15 increase, then it's even better. Okay, so we are looking for not only a strong movement in the direction, we also want to see a spike in the volatility. Nothing else so far, and so I don't want to do anything. I take a look at this stock, and it looks like it just broke below the Ichimoku cloud. Technical analysis tell us that this is a triple top or quadruple top, and after that the stock collapses, obviously. And now it's moving below the Ichimoku cloud, and the Ichimoku cloud should turn red And so that is an indication that the stock may continue to go down. Not 100%, but it's a good indication. Okay, so I'm going to leave it alone. Let's move on to Disney. Disney just to reach a new high. Okay, so what do you want to do? You want to take profits. Okay, the stock has moved up significantly. Now it's time to take profits. Let's go to the Analyze tab. And this is what we have. We have delta of 102.97. So what I usually want to do is neutralize my deltas, take profits essentially. But I also would like to account, because as you can see, I have 5 legs, which means at some point I made an adjustment of some sort. So I go to the Monitor tab, Account Statement, and here you see all that I have done along the way. So how do I account for that? How do I know what is real profits? What is? It looks here that I have a profit. Sure. No, a big loss. According to this, since the opening, $4,000. That's not real because we have taken profits along the way. So let's go to the Monitor tab and try to figure out exactly what have we done. For that, you could copy each one of these trades, say Analyze Trade, and that will show me, let's delete all that. This will show me each part of the trade, and its effect is either a credit or a debit. And go on like that, and of course it can get really busy, and it's hard to make any sense out of it because you don't know what is real. But this would be the best way, the most direct way to see what are your profits. So copy them all, and then you hide the position here, the actual position, say hide position, and this tells you how much profit we actually have made. $1,000.26 and $41 and 1,026 and 41 cents. But surely there is a better way to account for this, because this is not very helpful. It's a mess. I would like to see my position by the true value of the position of each leg of my position. Okay, so let's hide that or show all and delete all that. Okay, so what did we do? You see, I see that I have 170. That's a Gini trade of sorts. If you say Analyze Closing Double Diagonal, is the easiest way to get some sort of summary of what we have. Analyze the opposite, and that gives you the 4 legs. But as you can see, we have 3, 3, 3 all right, but we have 6 puts here. They're all 170. That's the right number. But we're going to have to say customize this, and on the put side, we're going to say 6. Okay, so we have 6 puts, and we have this 90 calls. How did we get to that? Well, you remember the rolling up. As we went along, I was selling my 170 calls and buying the 90 calls, which were cheaper, and that will be a way to take profits. Okay, you sell the expensive 170 and buy the cheaper 190, and the stock has continued to going up until now. This is the first indication of a correction here after a big jump. Maybe the stochastic is telling me, oh, you're going down now, baby. Okay, so how do I account for that? Well, first of all, I could say Analyze Closing, and then to say instead of sell, we buy, and that gives us our position. What we paid, the 3 190 calls, I paid $9.70 times 100, 9.7. Okay, but this is not the real price when all is said and done for this part of the trade. So how do I account for that? The easiest, most reliable way that I use is here. Go back, make sure you go enough days so that the original trade shows up, and then we're going to say here export to file and save it. Create a folder such as Genie Trades and save it as a web HTML document and call it this for Disney. And we're going to replace what I did before. Okay. Now open an Excel spreadsheet. And here we're going to say File, Open, and find that Disney HTML. Here it is. Now locate the trade history. And that is exactly what we have back here. Okay, this list of trades is right here in under trade history. Okay, and I'm gonna grab here from the execution time to the net price. Copy that and then create a new spreadsheet and paste that on. Okay, now I want to account everything but that 190 call set of 190 calls. Let me just increase the field of view here so you can see it clearly. Zoom in. And we have several 190s. Let me just show you. This one and do here. And the exact price as I have in my platform, 970. So, okay, we account for those. Copy that and paste it down here. Copy that and paste it down here. And no brainer here. That's a 9.7 3 calls. I can delete the rest here. And then I can account for the rest of all my trades. Okay, so I'm going to say equals price times the quantity times 100, and that gives me the debit or credit in this for this particular trade. Okay, so that's a short, and we're going to copy this formula and apply it to every line here. And then when we add them all up, I have the accounting for all of my trades. Click here on auto sum, and that gives me the total. Okay, but I have to divide that by 100, right? Because I multiply by 100. And now I divide minus 8.15. That's a credit. Okay. So let's go and see, analyze. And that is the value of this side of the position. So now it is a credit, not a debit. A debit will be if I were to buy that today. So let me copy this, copy the trade, and take it here to my Excel spreadsheet and paste it. And you can see here, say buy 3. Well, that means we have 3 lots. That means the minimum common divisor for all my puts and calls is the number 3, because we have 3, 3, 3, and a 6, which is also divisible by 2, all right? By 3, sorry. So therefore, we can divide this 8.15 by 3. So equals that divided by 3 gives me my credit price. Copy that and paste it right here. It's a credit now. Okay, so it's negative because it's a credit. Now we can hide, and that gives me exactly the same amount that we have calculated before. But here you have a perfect indication of where we are and what we need to do. Okay, needless to say, I want to take credit here because some kind of position, because I believe that Disney has gone as far as it's going to go. Well, perhaps not. So what I want to do is right now I have 101 delta. So I want to lower my delta to something manageable. Let's say 30 deltas. Okay, it's still positive because when the market declines, volatility increases, and I'm going to be all right because I have my deltas are, my Vegas are positive. But if the stock goes up, delta needs to be positive for me to make additional money, but Vega needs to be a little more tame because volatility should decline if the stock goes up. So let me just take profits here, and one way to do that would be to sell calls at a higher strike price. Okay, so I need to sell the 95s. Oh yeah, that's great. With 3 of them, it's still negative. With 2 of them, it is positive, and with 1 of them, it's still too high. So I'm gonna go with a 2. You can see here, let's say Disney goes to 290. Well, I make additional money. If it goes down, I make additional money too. I have neutralized my delta if this order gets filled. So let's do that. Confirm and send. And let's move on to Intel. Okay, let's go to the monitor tab, and you can see there is a single trade there. So I just simply right click and say analyze trade, and that's the result, a trade that cost me $15.03. And look at this, even though we are in the cone, we have good profits. Why? Because the volatility has spiked on Intel. You can see that here, that little tail here, and it looks like it's going to go higher. Intel has formed a double top here. Yeah. And you might think that, oh, if the stock goes down, I'm going to lose money. If it goes to 52, my profits will vanish. Well, actually, maybe not, because you still have a Vega that is strongly positive. And I don't really want to take profits on the upside because it needs to go over this smiley face, let's say to 67, before I can take profits on the call side. So I'm going to leave it alone. If the volatility gets much higher, I could take profits by simply closing 1 or 2 of my lots here. But for the time being, I'm happy with that. I'm going to move on. Logitech. Oh, okay. In this case, oh, look, I have puts at 90. That's an old position. Obviously, we entered the position here when the stock was close to 90. Okay, so what are we gonna do? Well, I think I would leave this alone. What happened is, as I went along, I sold calls as the stock was going up, and now I have 1 short call and 2 long calls. And this is what is called a back ratio, because it has 1 short and 2 longs, and the longs are a different strike price. Okay, so that's only 80 cents. It doesn't bother me to have it there, but if the stock was to rally to 170 or more, we could make additional money. If it goes down, we have already locked in profits, so I'm not going to do anything about this. Okay, you can go and account for all of the trades here. Once again, we started this back in October. Okay, and now all I have is March, and I obviously took my profits as I went along, so that I had a profit, and now my market value on that is $740. And yeah, I could account for that, and I would do exactly the same as I did, but it's very, very large position. I'm not going to do that. I'm not going to waste your time. But you could do this exact same thing. Take this to Excel. Let's save it. Save it. I can do that later. As HTML and say login. Okay, let's move on to Microsoft. Same thing. Okay, in this case we have several trades here. And this is where we are right now. Let me delete all that. And it looks like we have a loss, but once you account for all the trades, you'll see how it turns into a win. Also notice that at some point I had to use a cover call. That's because I was assigned short call options and I was negative 200 shares. That's important. If you ever had to get assigned options, then there is a different way to account for this thing. So let's do that. Export to file as an Excel spreadsheet. Gini trades, save that. Okay, let's go to Excel, and we're going to do the same as we did for Disney. Let me save this Disney file. You can save it as an Excel save that, and we come back to that later on if we need to. Okay, let's open this Microsoft Microsoft trade in the Microsoft Excel sheet, and let's search over here, trade history, and here it is. And now we copy that, copy, and paste that here, paste. Okay, now what we don't have here is the assignment, so that's important that you notice that. Let me zoom in, because we obviously bought back the shares that we were assigned, so it is important that you account for that. So let's copy and say insert copied cells, and here we're going to say minus, because we were assigned 200 shares at the price of 215. That's the strike price of my options. Okay, so that was a credit. Doesn't matter. Just put credit here if you wish. And let's go back to, and you see that I have won 250 calls. Everything else is just like a regular analyze closing, double diagonal, then say analyze the opposite, and that brings me back to what I had, and say customize, and you can see that I have 4 long puts at 215 March. Okay, and so here we go. We're gonna 1, 2, 3, 4, and we are going to adjust this price, and that's what we're going to find out in the Excel spreadsheet. This one, we are going to keep the exact price as we noted here, and you'll see that shortly. Analyze closing, and just switch that to the long side, only one, and put the price exactly as shown here, 3.75. You think that we have a loss here, but what we did was I roll it up. So I took already profits on the 215 call, obviously. Okay, this is what we are looking for, the price of this, result of this, excluding this 250 call. So let's go here and remove my 250 call right here for $3.75. Let me highlight it for you so it's easy to see. And now I say X, Command X, and paste it down here for reference. And then I'm going to add up all these profits, okay, so in costs, equals the price, the quantity, times 100. And of course, it's negative because the quantity is negative, it's a cell. And now we can expand this all the way down, and the only thing we need to change here is the stock shares, because I don't need to multiply by 100, so I need to delete those hundreds. Same in the long as well as the short. and that adds up to my costs and profits. So let's add up $368. Now I can bring my trade here, copy this, copy trade, and you can see that the common divisor here is 2. So we need to divide this number result here by 200. Just paste it there and you see it says by 2. Okay, so I'm going to say equals the total divided by 200, and that gives me $1.84. Okay, so $1.84. So this is the realistic result of all that manipulation, buy, sell, whatever, that I have done as I went along is this. Okay, so I do have a $672 in profit. Let's look at the chart, and it looks like Microsoft is continuing down. I don't have any urgency to neutralize my delta, but I should, because what happens? I need to wait until next week. In between now and then, a lot can happen. So what am I going to do? Well, I could sell a put, 215. Well, it seems like not a good idea, because the put might get there. We can sell calls, sell calendar, sell one call. No, that wouldn't be good. That would turn my deltas even higher, more negative, that is. But we can say analyze rolling, and that gives me a calendar, just one of them, okay? And you have we are going to buy the March 5th and sell the March 19th. Okay, so that's one of my calendars, bye-bye. Okay, so when I do that, does that reduce my delta? Let's say, let's erase my simulations here. And this is my diagonal. Okay, so I have 61. If I sell one of the calendars, it reduces my deltas to 55. From 61 to 55. That doesn't seem to be that much, does it? What if I sold one put here, since they're expensive right now? March. Yeah, I get $1.21. But what about my deltas? Are they reduced? Yeah, pretty much. They go to 45. If I sold two of them, this is too neutral now. What if the stock continues to, if this bear market really takes off? No, what I want to do is sell one. And that transforms my trade in a little bit more of a manageable. I won't lose so much money if the stock bounces back and goes higher. I'm not getting a whole lot from them. How about if I sold one of my puts here, the March, because those are more expensive, aren't they? Okay, let's say March 19th. Oh yeah, they're definitely more expensive. And look how much I paid for them. Okay, but remember, we have already some profit, so let's not worry too much about whether we're losing or gaining with one trade. It's about the group. Is the group making us money? Okay, so by doing that, I go from 61 to 37. Not much different than if I do the single March 5th. You know what? I think I'm going to do the March 5th. Okay, because the March 5th is more likely to end up worthless. Okay, let's just do one and move on, okay? I don't want to waste more time. That seems like what I want to do. Reduce my deltas without sacrificing everything. Let's go check it out. And this should fill tomorrow morning. Tomorrow morning at the opening, I might adjust these prices because I can see that they're higher here. If this trade fills, it will look like this. Okay, that's good because my deltas are 42. That's acceptable. Let's move on to NU. In this case, It is exactly the same. I have not done any additional movements on that. So all I have to do is analyze trade, and of course, here it is. We have 480 bucks on that one, and the stock looks pretty strong until today. We'll see what happens. If it goes down, we'll be fine. Volatility should pick up. Let's move on to Qualcomm. Okay, let's do the same thing. Export this. Export to file. And let's set this to an HTML and call it Qualcomm. Again, same thing. Take it to Excel. And let's say import the Qualcomm. Open Qualcomm. And then here search over here at the top right corner and say trade history. Very good. Here we go. Copy that. Paste it here. And zoom in. Okay. And we look for that 955. This is my 165 call for $9.55. If you take a look here, right here we have one call for $9.55. So we want to remove that from the accounting. Let's say buy at $9.55. The rest is a four-legged Gini trade. Analyze closing, double diagonal, then say the opposite, analyze opposite, and then adjust the prices here to 2 short calls, 3 short puts. Okay, 2 long short calls, 3 short puts, 3 long calls, and 4 long puts. That's our trade, but we have to account for the credits and debits. Okay, so this is what we're looking for, the price for this portion of the trade. So to do that, we remove the 165 call, that one there, Command X, paste it here so we can refer to it if we want to. Delete this, and then we're going to account for the rest of all the trades. Is the price times the quantity times 100 for each one of them. And we just add it all up, $288. Okay, how many lots we have here? I suspect it's only one because you have 2s and 3s. You can't divide them all by the same number. And you can see that it says buy one, so it's one lot. So we're going to divide this 288 by 100. And this is the cost per lot, $2.88. So we can put it here, 288. And we can delete that, and this will be the true profit or loss for Qualcomm. There. We can hide the positions, and this is our trade right now. And I see that it's completely delta neutral, so I'm not going to change anything. Okay, if the stock bounces back up and go to this level, I'm going to make additional money. If it keeps on going lower, volatility is going to increase and my deltas become negative and I will make additional money. Right now, I don't want to do anything. Let's take a look at Qualcomm. That's a very strong decline. Volatility is on the rise, so I think it might go lower. Okay, so I leave it alone. That's great. But if I'm wrong, goes up, we'll be fine too. Let's look at Starbucks. Export to file. The repetition will help you out. SPUX, save it, and then go over here to Excel again. We have done the saving with QCOM. Let's open the star box right here. Same thing, find the trade history. Here it is. We copy that. Zoom in. We do the exact same accounting. Price times quantity times 100. And copy that to every line. Add it all up. And that's the price per share. So we're going to divide that by 100. Let's copy the trade. That's the final trade as it stands right now. Let's copy that and take it to the Excel spreadsheet and say paste. And you can see there is only one lot. Buy one, blah, blah, blah. Okay, so we're going to divide the 17.65 by 100. And as you can see, that's exactly what I had already. And here it is. My deltas are negative. Do I want to take profits? Not particularly. It looks like it's bouncing from the Ichimoku cloud, but today looks like a bad candlestick. Maybe I think it's called a shooting star, which is saying it's getting to the top. And if it goes higher, I'll be fine. My deltas are negative. You can sell one put, but I think that will turn it to negative. Okay, so we have 8 puts versus 5 short puts. That's a difference of 3. On the call side, we have 2, and we have here 5, difference of 2. You can balance it out by either selling one of the March calls or one additional March 5 call put. Sorry, let's sell one of them and see what happens if I do that. Okay, I think it turns it very neutral, and that's good. That's perhaps what we want. But that's if we sold the March 19th. What if we sold the March 5th? Well, there's not much premium there left, only 8 days. And come to think of it, we could roll this further out because we have 8 days to expiration, so we can have this roll over, analyze rolling, and to March the 12th. What if we did that? Would that help us neutralize our deltas? Yes, it does. See, this is what we have now. This is if we do the rollover. We take some profits and we neutralize our deltas. If you want, you can compare. Yeah, I think if you can even show this to expiration to see what it would look like. It looks great. Yeah, I think I want to do that. Give ourselves a week more because we're getting closer where the 2 expirations are going to meet. And this will be our last move, but it's a credit, and I want to be able to profit if the stock, it looks like just formed a double top and now it's going to go lower. It should break below this low here and turn the Ichimoku negative, but I think that will depend on the market. The stock itself is doing great in terms of profits, but it is all about the market pressure sometimes. So I'm going to do this, confirm and send, and that way I neutralize, take a little money off the table, and set myself for additional profits. Let's look at target. Let's go to the monitor, and you can see that I have only 2 trades here. Okay, so in this case, everything else is from a previous trade. So let's copy this, Let's copy these two things, okay? Analyze trade, and of course I've done it already, but let me do it again. Analyze trade. There you have it. So these two trades is the resulting price. In this case, let's say 1 to expiration, and it shows us that we have $407 profit so far, and we have April for the longs and March for the shorts. So the new trade is a combination of the two, which means because we did the rollover from February to March, we need to change here in this new trade the February to March, March 12th. Great, but this number is not correct. Let's go to the monitor tab, and in this case we have the two trades right here. So it's 34.65 is the original minus 10.14. So we don't really need to do any further accounting than that. 34.65 minus 10.14. The difference is 24.51. 24.51 is my resulting trade. And it should match the combination of the two alone. These two trades gives me a profit of $407.92. And delta is negative, should continue to be the same. Okay? And so here we go for exactly right. So I can delete the other two, and you could even close this position by simply saying analyze the opposite, and there you have it. That will give you your profits immediately. Let's take a look at what I think. Oh, earnings are coming up. Okay, so we have a profitable trade. Do I want to risk it to go over the earnings? Probably not. So I'm going to simply close this position here, confirm and send. As tempted as I am to believe that the stock is going to move strongly, I just assume take my profits. And let's go to the account statement. Again, I would review this tomorrow morning, not necessarily showing to you, and try to look for a better price to close these positions. Let's go to Texas Instruments. I believe that's what it is. Look at that. Big drop today after a big move up yesterday. Volatility spiking. Let's go to the monitor tab, account statement, and you can see that's a single trade, no worries there. Analyze trade. And here we are. We have good profits because volatility has spiked. I want to change nothing. If the volatility was above 40, I might take profits. And that's all there is today. I hope this helps, and let me know what your opinions are. Happy to know. I know this is long, but it was worth it, I think. So thank you very much. See you next time. Bye-bye. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.